historically speaking, we've seen positive momentum continue. I mean, you can look at it a different way too. I pulled some data just looking at any 5-month period in which the S&P 500 has been up north of 25% over that 5-month span. And again, the data kind of lines up to tell you that 93% of the time after that 25% performance in 5 months, 93% of the time, the next 12 months have been positive as well. So call it momentum, call it whatever you want. Data would support that just because we've seen positive and strong positive performance lately doesn't necessitate a downturn.
Got it. So for investors, 12 months can feel like a long time. So even though the data suggests that markets are statistically higher 12 months later after a 5-month run-up, it could mean in the next month or 3 months or a short period of time, when you talk about volatility and choppiness, markets could pull back. They don't just move in one direction straight up. So they could pull back, but over an extended period of time, like 12 months, the data suggests the market data suggests that the stock market's going higher.
That's absolutely correct. And what I would say gives me more confidence than I had maybe this time last year is that underlying corporate fundamentals look good. So we're seeing strong revenue and earnings growth across sectors, not just concentrated in one or two sectors, but we're also seeing widespread participation in equity markets across sectors that are lifting broad market indices upwards, which we didn't necessarily see at this point last year. And so when I think about the first quarter of last year, in which the S&P 500 was up about 7.5% versus this year, in which the S&P 500 was up modestly north of that, the biggest difference is that I would assert we're in a much healthier market right now. What am I meaning when I actually say that? Well, if you look at the first quarter of 2023, returns broken out by sector, which is exactly what I'm showing on the screen right now, it was really just 3 sectors and 7 stocks, for those who are familiar with the Magnificent Seven, that drove returns. The majority of other sectors were flat or even negative. If you compare that to this year, we have 10 out of 11 GIC sectors positive. There's a lot more widespread participation and what is contributing to the underlying index return. And I think that is what I would describe as a much healthier market. So even though that you might see some semblance of volatility over the coming months and intermittently, the fact that we have healthy corporate fundamentals and much more widespread contribution across the equity market gives me a lot of confidence.
Yeah, and I would say for investors, it should enforce or reinforce patience. I really think it's important for investors to be patient during these periods of time.
Couldn't have said it better myself.